The home insurance market faces a crisis. Experts say insurance companies can't keep up with the cost of disasters,
leaving many homeowners to pay the price with rising premiums. According to a recent bank rate report, each year the average homeowner pays more than $2,200 for $300,000 in dwelling coverage.
And with no end in sight, many are asking, is property protection a worthy investment?
Investigative reporter Heather Graf has an in-depth look at why this is happening and how some are paying the price.
I don't foresee us living in this house for the rest of our lives, much as I'd like to.
Phil Goddard has lived in his Florida dream home since 2019, but he's not sure how long he and his wife Pam will be able to stay.
It's difficult, and it's something that you lie awake at night worrying about sometimes.
Following Hurricane Sally in 2020, Goddard says his homeowner's insurance premium jumped 73% to more than $4,000 annually. And today, it's even higher.
I don't have a huge income. We're living mostly on savings.
According to the Insurance Information Institute, premiums in Florida are 4 times the national average, and dramatic increases like this are being felt well beyond the Gulf Coast where Goddard lives. Rates across the country are surging, with Nebraska, Oklahoma, Kansas, and Colorado among the states with the most expensive homeowners insurance.
And it just feels like they're holding us to ransom. They're providing services that we need, and we don't have any choice but to pay whatever they make us pay.
Most lenders require homeowners insurance, but Goddard doesn't have a mortgage, so he could choose not to have it. While it's crossed his mind, he says he knows that would be dangerous, especially in hurricane-prone Florida.
How important would you say home insurance is, specifically in that state?
It's extremely important. There is a very strong likelihood that if you live here for any length of time, you will be affected by a hurricane.
Insurance Information Institute CEO Sean Kevelin says foregoing coverage can come with sizable risk.
We would recommend people going uninsured only if they have the financial wherewithal to do it. But if you don't have that capital, you can end up in a devastating place.
Even so, a 2024 survey by the Consumer Federation of America found that more than 6 million homeowners nationwide aren't insured.
The homeowners insurance market is in a crisis right now.
Douglas Heller, the organization's director of insurance, says consumers are being forced to make tough decisions, like selling their homes or stripping down their coverage, and that can come at a cost.
So even if they have insurance, when a natural disaster hits, or even a local personal house fire, we don't have the coverage we need to rebuild, even if we have some coverage.
He says the issue has been compounding for years and attributes the increase to factors including accelerating climate catastrophes, elevated inflation and rebuilding costs, and something you may not be aware of called reinsurance, which property insurance companies buy to limit their risk. In early 2024, rates for reinsurance increased by as much as 50%. Experts say this type of insurance is important because it helps protect providers' financial stability, particularly following major claims events.
We have this confluence of increasing risk associated with climate change, dramatically increasing reinsurance premiums, and for most Americans, that's turning into these huge price spikes that we're seeing.
This, as insurers nationwide say they're also feeling the pinch. According to credit rating agency AM Best, in the first half of 2023, the industry recorded more than $24 billion in losses, largely attributed to natural disasters. The impact of these losses and rising costs are now leading some insurers to exit high-risk states like Florida and California.
It can't continue.
Robert Gordon is with the American Property Casualty Insurance Association, which represents approximately 65% of the marketplace.
Why are we seeing insurers reduce coverage or even pull out of some states altogether?
Well, there's an old saying, if you find yourself in a ditch, stop digging. insurers are hemorrhaging money, and there's got to be appropriate adjustments.
He says potential solutions include mitigation efforts like clearing trees from around your house, modernizing your roof, and making home repairs. For roof upgrades, homeowners in Alabama and Louisiana can get grants of up to $10,000.
Let's try to reduce risk, because not only does that eventually lower costs, that makes us safer. It makes our communities more resilient.
Heller also supports proposed legislation aiming to create a federal reinsurance program, which would set a cap on insurers' liability in a natural disaster. That means after a certain point, the federal government and taxpayers would pick up the bill for these pricey weather events. The Insure Act would also require participating insurers to offer coverage for all such events.
Let's stabilize the insurance market for the insurance companies by creating some reinsurance options. And at the same time, let's make sure that the products consumers get are better and stronger and more affordable.
For too many, the matter could not be more urgent.
We're really putting communities across the country at risk of losing the ability to have home ownership.
Phil Goddard understands that risk all too well.
It's just so gorgeous. It's just the perfect house.
As skyrocketing rates threaten to come between him and the place he calls home.
And it's just sad to know that I probably won't be living here for the rest of my life.
As many high-risk regions contend with increasingly limited coverage, more homeowners are turning to what's called last resort insurance policies. These state-mandated plans are available to those unable to obtain private insurance. As of July 2024, Florida's insurer of last resort had about 1.2 million policyholders. Despite efforts to downsize, it's still the state's largest provider, and that has some concern. You see, in the event it becomes unable to cover its claims, Citizens Property Insurance could levy special assessments on all policyholders in the state. The U.S. Senate Budget Committee has launched an investigation questioning if that's a feasible solution. We spoke with Tim Serio, Citizens President and CEO.
To me, there seemed to be a fundamental misunderstanding of how Citizens is set up. We will pay the claims, but the problem is it's unfair to Florida policyholders. That's what we're trying to fix. But a federal bailout's not even on the table, and that should be welcome news for the Senate Budget Committee just because of the way Citizens is structured.
Adding to the frustration of many policyholders around the country, not all natural catastrophes are covered by homeowners insurance.
For example, flood damage and earthquakes aren't included in standard policies. And in Florida, a recent law passed now requires many Citizens customers to buy flood insurance, even those in non-coastal regions.
While the government created the National Flood Insurance Program in 1968 to make those policies more accessible, the program has been in the red for years. According to the Congressional Research Service, it's currently more than $20 billion in debt. So what can you do right now?
Experts we spoke to say you should shop around and see if you can lower your rate by increasing your deductible or changing exclusions in your policy.